David Reyes back here, your retirement architect. Happy to share this Sunday with you. And today's kind of, I don't know, what do I want to call it? Be careful. It's not going to be a pretty picture, in my opinion, going forward in these markets for a while. If you just caught me, we're talking about where we're at. I kind of call it Where's Waldo. Where are we at in this big map of the markets? You know, we've had this giant rally since February, and we've had, since August, we've had 4 up and down, up 10, down 10, at least in the last 6 months. That's not healthy. January was the worst start to the markets in history. We had the biggest rally in any one quarter to go into positive territory in the history of the markets. That's called volatility. And volatility typically is where you're going to see problems in markets. I've talked about all the different reasons why I'm concerned about a significant top in the market, like 2000, like 2008. Now now we're in 2016. I'm not saying we're going to have a 50% correction, but it doesn't matter what I think. What matters is, you know, we want to protect ourselves today. I always say, you know, it's like we want to make sure we have that umbrella. We want to make sure, you know, we don't know when it's going to rain again, right? We don't know when it's going to storm again. We got to have an umbrella. And most of you don't have that umbrella. Most of you don't have that what I call, you know, belt and suspenders. That car that has the seatbelt and the airbags, right? We need as much protection as possible. And so I just really believe we are at a significant high in the market. And most of you, when I look at your portfolios, you're not protected to the level you need to be. Diversification in and of itself is just not enough anymore. It's just not. I can tell you in 2008, basically every asset class fell. I don't care if it's stock, if it's international, large company stocks, small company stocks. It doesn't matter. You lost a lot of money. I mean, a balanced portfolio, quote, safe portfolio, like 60% stock, 40% bonds, was down 30%. That's not risk management. So we use additional risk management strategies, basically ensuring against catastrophic risk that is that belt and suspenders. It's that airbag, the additional protection. So we're going to mitigate risk significantly, okay? So we're going to define our risk. And we have certain strategies where basically we're shooting for a maximum loss of around 12, 15% with maximum gains of 20. Now, it's been studied that if you can mitigate your losses and even take less of the upside, you're going to have a better success rate. We don't need all of the upside of the S&P, but as long as we're not going to participate in all the downside, and we're going to get a little downside, and we're going to get a significant part of the upside, what a strategy. So if you want to learn more about how we protect capital, how we manage retirement and do retirement planning, give me a call, 1-800-611-1967. That's 1-800-611-1967. Or we're going to talk at our next workshop at the Reyes Retirement Institute. If you'd like to attend, just give us a call. Also, if you'd like just to have a conversation with me on a second opinion on what you have in your portfolio, making sure that you're going to be protected against the next downturn and how to make that a positive. There's ways to make money even in these down markets that we're probably going to face here relatively soon.
Consider this your personal invitation to join David Reyes of Reyes Financial Architecture at his next interactive workshop entitled Essential Financial Strategies for This New Economy. And it's coming up this Wednesday, June 8th, 6:30 at the offices of Reyes Financial Architecture. During this interactive workshop, you'll discover the 3 biggest mistakes to avoid in retirement, how to reduce your investment risk, maximize your retirement income, and minimize your taxes. Call now to reserve your seat at 800-611-1967. That's 800-611-1967. This Wednesday, June 8th, you're invited to Essential Financial Strategies for This New Economy, hosted by David Reyes. That number again, 800-611-1967. 800-611-1967. Call now to reserve your seat.
So one of the misconceptions you hear a lot is, you watch CNBC and the talking heads, it's a stock picker's market. It's always a bull market, right? And, 90% of all stocks fall in a bear market and 70% of all stocks rise in an up market, a bull market. And it was interesting. I was listening to a segment by Jack Bogle, who is the head of Vanguard. Everybody's a Vanguard fan. But, Jack did this interview, and he's talking about what to expect in the stock market on a forward basis and how dangerous the market is right now. Here's some of his thoughts we're going to play for you on where he sees the market going forward and just his overall view of where we're at today.
There is no such thing as a stock picker's market. Tyler, you know that. We've talked about it before. And that is, if I'm a good stock picker, by definition, you're a bad stock picker. And we come out equally. The average is the average. The total market is the total market. And the stock picker's market is, I don't know, a funny term that it's like smart beta, Tyler. It's a term that's very meaningless that catches on for reasons best known to the Lord, I guess.
I like your plain talking, Jack. When it comes to the overall indices, though, you said before, when things are sort of uncertain, when things are volatile, it's not wise usually to do anything. At this point, with markets just a couple percentage points away from all-time highs, and with the S&P 500's current PE almost at 19, what do you do?
Well, I actually make the PE higher than 19. Okay. I have it around 22. And the difference between us is a pretty simple one. I use actual reported earnings, GAAP earnings, GAAP, generally accepted accounting principles, that have already been achieved. And that gives you about a 22. If you go to forward earnings and forward operating earnings, that's things that happened to the company during the period, and look at just what operations were, and then you get it down to about 18 or 19 perhaps. So the market is not cheap. The dividend yields are low, right around 2%. They've been that way for quite a while. And this is not if you're in the market for the long term, you have to accept the market's return, whatever it may be.
Well, I agree with everything Jack said, except one thing, and I'll get to that in a second. What Jack Bogle, the founder and CEO of Vanguard Funds, was talking about is how expensive the market is right now, and how he believes forward returns are going to be very paltry. And I'll talk about that because I have some data on that, which I support. And number 3, he said, you just have to hang in there and, take your lumps because the market will come back. Well, I just don't agree with that. If you have an unlimited time frame, right? If you can just take these 50% drops, not only emotionally, physically, mentally, financially, then that's okay. We're not for everyone, because we're not going to go through those peaks and valleys like that. And so you can't afford, when you have a 20, 30-year time frame for retirement, and you're taking distributions, you're done. Let's say you have $1 million portfolio and the market corrects 30, 40, 50%. Now you have $500,000 and you're taking 5% out, let's say 50,000 a year originally. To have that same quality of life, you'd have to take out 10% of your portfolio. What's going to happen? You're going to run out of money. So we want to make sure that we don't run out of money in retirement. And in fact, the average return that is projected, according to Robert Shiller, who is a Nobel Prize winner in economics and a Yale professor who I follow quite a bit. He also does the Case-Shiller Index, which is the housing index for the top 20 cities in the United States. But he predicts on a forward base of the next decade that the average rate of return of the next 10 years is going to be 0.9%. And worst case scenario, down 0.4. I mean, that's pretty stark. To put that in context, from 2010 to today, the market's averaged less than 4%, just under 4%. You're talking 15 years. That's not good. And that's riding out 50% bear markets. So what's the solution to this? The solution is a couple things. A, you got to have a plan. We got to have a plan. We got to maximize our Social Security benefits. Being debt-free is a good idea. But we want to protect capital. I mean, one of the simplest ways, haven't used this term in a while, it's called Occam's razor. And Occam's razor is a scientific precept that says when all else fails, when all things being equal, the simplest solution is always the best solution. I'm going to give you the simple solution, chalkboard and crayons, I call it, is let's just protect our capital today. Let's lock in profits. How bad of a decision would that be if I showed you a way to sell high right now today, boom, capture all the gains that you've had, hopefully since 2000 2008, 2009, if you've been an investor in that time frame, capture the gains, protect the principal, still be invested in the markets, get guaranteed lifetime income streams up to 5-6%. Don't worry about a thing.
Consider this your personal invitation to join David Reyes of Reyes Financial Architecture at his next interactive workshop entitled Essential Financial Strategies for This New Economy. And it's coming up this Wednesday, June 8th, 6:30 at the offices of Reyes Financial Architecture. During this interactive workshop, you'll discover the 3 biggest mistakes to avoid in retirement, how to reduce your investment risk, maximize your retirement income, and minimize your taxes. Call now to reserve your seat at 800-611-1967. That's 800-611-1967. This Wednesday, June 8th, you're invited to Essential Financial Strategies for This New Economy, hosted by David Reyes. That number again, 800-611-1967. 800-611-1967. Call now to reserve your seat.
David Reyes, AM 760, KFMB.
A well-designed, tax-free retirement. And you can have it.
How come I didn't find out about this before?
The retirement architect, David Reyes, will continue next.